That was derived from MCQs. These are all questions related to the depreciation. So we can say this is MCQ question for depreciation. So without further ado, let's get started and then solve this paper. So the first question is, a business buys a non-current asset and decides to apply this straight line method. The method is straight line method here. The accountant forget to include an estimated scrap value in the calculation. So which statement is correct? So what happens if he does not include the straight line or the scrap value while calculating the depreciation using straight line method? Okay. So formula to calculate depreciation is cost minus scrap value divided by useful life. Okay. Now, if it does not include the scrap value, then the amount of depreciation which we calculate will be overstated. Okay. I'll show you with the help of example. Okay. For example, if the cost is, let's say, 100,000 and scrap value is 10,000 and useful life is, let's say, 10 years. Okay? So in that case, the amount of depreciation according to this formula should be, the depreciation should be 9,000 per year. Yeah? But if we forget to write down scrap value, then the amount of depreciation will be 10,000. Okay? Because in this formula, the scrap value is eliminated and it is 100,000 divided by 10, which is 10,000 per year. So now in that case, what we can say is the annual depreciation charges is too high. Okay, so that means this option is correct. Now, if option number 1 is correct, then according to the elimination method, this option C and option D is eliminated. So we have either 1 and 3 and or 1 and 4. Okay. So what does option 3 says? There is likely to be loss on disposal in the future. Okay, so when you sell asset in the future, you might incur loss. Now, second option says there is likely to be profit on disposal in the future. Okay, so first option is right? Question number 1. So let me solve the second one. So second says the profit. There will be profit on disposal, there will be loss on disposal. So let's say we are selling it after 7 years. Okay? Now, every year our amount of depreciation is 10,000. So that means after 7 years the amount of depreciation would be 70,000. Now, if the depreciation or the total accumulated depreciation is 70,000, then we can say the net book value is 30,000. Okay, of the asset if we are disposing it on 7th year or after 7 years. So it means that we had to recover only 30,000 here. But in actual case, the amount of depreciation where scrap value, if scrap value is not forgotten by the accountant, in that case, the scrap value should be, or the accumulated depreciation should be 63,000. Now, as you can see here, if we have 63,000 as our accumulated depreciation, my net book value would have been 37,000. Okay? So in this case, I had to recover 37,000 on disposal, and in this case, I had to recover only 30,000 on disposal. So that means there is a possibility that in the future, when you dispose asset, you may earn profit. Okay? So the correct option for this answer would be, this question would be answer number B. Clear? Okay, let's move on to the next question. Okay, before that, let me check. Yes. Next question says, the table gives information related to the non-current asset of a business. Net book value at the end of the year, is 25,000. Net book value in the beginning of the year is 16,000. Depreciation charges for the year is 5,000. And additions at cost during the year is 22,000. So in the beginning of the year, we had an asset value 25,000. Sorry, at the end of the year, asset value 25,000. In the beginning of the year, 16,000. Depreciation we charge during the year is 5,000, and we purchase worth 22,000 during the year. So the question is, what is the net book value of the disposed assets during the year? Okay, so how much are we disposing, and what was the net book value of that asset? Question is very simple. So we can begin with a beginning value. So in the beginning of the year, we have 16,000. Now, during the year, we purchase worth 20,000. Yeah, 22,000. So if we purchase worth 22,000, then I should have total value of 38,000. Okay, and the asset value, total value of asset is 38,000, and in this case, we have total depreciation of 5,000. So if you subtract 5,000 depreciation, then I should have 33,000 in my book as my net book value. But what I can see here is the value is only 25,000 here at the end of the year. So that means the remaining asset or the missing asset is the amount that is disposed during the year. Okay, so if you subtract 25,000 from here, then I can say worth 8,000 is missing. Yeah, so the correct option is 8,000. Option number A. Option E. Understood? Okay, let's see. Let's verify our answer. Yes. And let's move on to the next question. Next question says, the accounting year of a company ends on 31st December. Okay, so the date is 31st December. It purchased a warehouse for 100,000. Okay, so we are purchasing warehouse for 100,000 on 1st January 2013. The warehouse had an estimated useful economic life of 25 years. Okay, the company accounting policy is to depreciate the warehouse using the straight line method. So every year the amount of depreciation would remain the same. On 1st January 2018, in the beginning of 2018, warehouse was revalued at 120,000. So the question is, what is the depreciation charges for the year ended 31st December 2018? Okay, this question is very easy and common as well. You can see some similar question in later questions as well, which is, in this case, the asset was purchased on 1st January 2013, and then it is revalued on 1st January 2018. So we need to see how many years it took. Okay, so from 13, so it is 13 full year, 14, 15, 16, and 17. Okay, so this 5 years has been used. Okay, So out of this 25 useful life, 5 years is gone. So now the remaining year that I have is 20 years. Okay? I have 20 years, and the new value, which the revalued figure of the asset is 120,000. Now, according to the calculation of depreciation, it is cost or the value divided by scrap value, minus scrap value divided by useful life. Now, in this case, the cost has been changed from 100,000 to 220,000. So we can say 120,000. And we don't know what is the scrap value. Okay, it's not mentioned here. So it means that we don't have any scrap value, or we assume that we don't have any scrap value. So the useful life has also reduced from 25 years to 20 years because 5 years is already passed here. Okay? So now we have 20 years. So we can say the depreciation amount for this year would be 6,000. Okay? Option D. Okay, let's verify this. Option D. Next question, why is depreciation provided on non-current asset? Options are, so that the cost is allocated to the period that benefited from them, so that the business entity concept is applied, so that there is enough cash in the business to replace them, so that they are shown at the market value. Okay? So the answer for this question is option A. It means that whenever we use the asset, we have to provide depreciation for that, because the revenue that we have earned is also contributed by the asset that we have used. Example, we are using machineries. So if machinery is used, because of that we produce product and we can sell those products. So it contributed to earned revenue in that year. Okay, so that's why we use this one. So correct option is so that the cost is allocated to the period that benefited from them. Okay, so most of the students, they might write this option so that there is enough cash in the business to replace them in the future. This is incorrect. Okay, this option is incorrect. So do not write down this as your answer. Okay, we know that business entity is not the one, okay, and we also do not write down assets at market value. So this is also not the correct option. So, but most of the students, they might tend to write answers as this, but this is not true. Okay, so the correct option is so that the cost is allocated to the period that it benefited from them. Let's verify our answers. Okay, option A. Let's move on to the next question. Next question says, a company purchased an asset costing 100,000. Okay, the cost is 100,000. It had a life of 5 years. Okay, so the life expectancy is 5 years, and an estimated residual value of 20,000. So the remaining value is 20,000, as the scrap value is 20,000. The company used a straight line method for depreciation. So this asset, the asset was sold for 5,000 at the end of 5 years period. So after 5 years, you are selling it for 5,000. What is the total effects on year's profit from both depreciation and selling of the asset? Okay. So now on 5th year, what will you write it down on income statement from depreciation and from disposal of non-current asset? That is what the question is. Okay. So now, if you calculate the depreciation, straight line method, so depreciation is equals to cost minus scrap value divided by useful life equals to 100,000 minus 20,000 divided by 5. In this case, it is 80,000 divided by 5, and your answer is 16,000. Okay, so every year you will subtract 16,000 as your depreciation. Okay, so people must be wondering, okay, this could be the correct answer. Okay, no, this is not the correct answer, because this is only amount which is related to depreciation. They are also asking us from depreciation and sales of the asset. So what we'll write down from the sales of asset. Okay, so after 5 years, now 80,000 has been deducted. We should be recovering 20,000. Okay, after 5 years, we should be recovering 20,000. But how much we recovered? Only 5,000. Okay, so the net book value after 5 years is 20,000, but sales proceed is only 5,000. Okay, so that means this 15,000 is our loss on disposal. Okay, we made a loss on disposal 15,000. So that means this should also be written in income statement. Okay, and this one also in income statement. So the total that we write in income statement is 15,000 plus 16,000, 31,000. Okay, perfect. Option D. Let's verify this answer. Okay, let's move on to the next question. It says, a business provides the following information. Check paid in 2018 for equipment bought in 2017. Okay, so we are paying in 18, but it was bought in 2017 for 15,000. Equipment purchase on credit in 2018. So in 2018, we bought worth 42,000. The net book value of the equipment on 1st January 2018, the net book value of the equipment is 83,000. Okay, and the net book value on 31st December is 67,000. So what was the depreciation charges in income statement for the year ended 31st December 2018? So on 31st December 2018, how much depreciation we charged in income statement? That is the question. Okay. Okay, so let's start with the net book value that we had in the beginning of the year, 2018. So we have 83,000. Okay, so this 15,000 that we are paying in 2018 will not come here because it was already bought. Okay, is only the cash that we are paying here. But in equipment account, it is already included. Okay, so when we calculated net book value on 1st January 2018, this 15,000 is already included here. So we do not have to write down that. But in 2018, we purchased another one. Okay, so during the year 2018, we purchased worth 42,000. So plus 42,000. Okay, and it gives me 5 and 8 plus 3, 12. So 125,000. Okay. Now, as you can see that I should have 125,000 at the end of the year, but what I'm saying is I just have 67,000 at the end of the year. So If I subtract 67,000 from here, then I'll get what is the value of depreciation. Okay? The value of depreciation is 58,000. Okay, correct option D. Let's verify our answers. Okay, let's move on. The next question says, what are the causes of depreciation on non-current asset? Okay, it could be 1, it could be 2, it could be 3, okay, or it could be combination of any. So the first option is change in its cost for repairs. Okay, so would it be because of the repairs? No, it is not because of the repairs. Okay, so it could be change in its market value. Okay, is it because of the market value? No, we do not write market value in our book. Either is the net book value or the cost. Okay, and the last one is because of the change in the technology. Sorry, because of the change in the technology. So the correct option is change in the technology for the asset. Okay, this is the correct answer. We know that because of various reasons, we charge depreciation, and one of the cause is because of the change in the technology. Okay, economic reasons, passes of time, wear and tear. So those all are the reasons. So this is your correct options, or option D. Let's verify this. Okay, perfect. And let's move on to the next question. June purchased a new machine. She depreciates it at the rate of 40% per annum using the reducing balance method. After 2 years, her net book value is 3,600. Okay, so what was the purchase price of the machine? For this, let's make a timeline, and this is 2 years. This was the cost, and in this cost, during this year, we subtracted depreciation to find out net book value. And from this net book value, we subtracted another depreciation, okay, to find out my ultimate net book value, which is equals to 3,600. Okay. The question is, what was this cost? Okay, so we need to find out this cost because this is the purchase price here. So for this, we need to find out this two amount of depreciations here. Now, in order to find out this depreciation, first I need to find out what is my net book value, because 40% of this net book value is my depreciation amount. Okay, so let's assume that this depreciation is X. Then we can say this net book value is 3,600 plus X. Yeah. So 3,600 plus X minus X will give me 3,600. Okay, quite simple. Now, how do you find out the value of X? So in order to do that, we need to find out in a way how we calculate depreciation. So 3,600 plus X, and if we calculate 40% of this, then I should get my depreciation amount, which is X. Okay, so let's reshuffle this equation, and we get 3,600 into 40 equals to 60x. Okay. So I can say that x equals to 2400. Okay, so the depreciation amount is 2400 here. Now if I replace this, I can find out what is the net book value on this date. So 2400 plus 3600 is 5000. No, 6000. Yeah. So the net book value on this date is 6000. So we have to find out cost. So in this one, we need to find out what is this depreciation. So let's assume this depreciation is y. So from this cost, if I subtract y, then I'll get 6000. So we'll do the same equation like 6000 plus y minus this y, because this is the cost, okay, and this is the depreciation, then we'll get 6000. So what is the value of y? So if I can find out the value of y, we can find out what is the cost. Okay. Similarly, we'll calculate depreciation. So it is 6000 plus y, and 40% of that should give me y. Okay. Equation is very simple. So it is equals to, we can say 60y equals to 6000 into 4t. Okay, so therefore y equals to 4000. Okay, so if I find out y values is 4000, so 6000 plus 4000 will give me 10,000. Okay, so the correct option is 10,000. The value of machine that she bought was 10,000. Let's verify our answer. C, 10,000. Okay, let's move on to the next question. Question says, the following information related to the motor vehicle for the year, for motor vehicle of the business. So the net book value on 1st January 2018 is given, and 31st December 2018 is given. During the year following occurred, addition motor vehicle with a costing of 195,000 were purchased. And second one is, a motor vehicle originally cost 80,000 was sold for 24,000 at a profit of 2,000. Okay. So question is, what is the depreciation charges for the year 2018? So to solve this question, we need to see what was the net book value of this asset when we are selling. Okay. Answer is very simple here. So it cost you 80,000, and when you sold it for 24,000, you made a profit of 2,000. So in order to make profit, my net book value has to be less than the sales proceed. Okay. So how much exactly? It is 2,000. So if your net book value is 22,000, and if you are selling it for 24,000, then you make a profit of 2,000. Okay. So you are saying, according to your book, the value of asset is only 22,000, and if you are selling it for 24,000, then you made a profit of 2,000. As simple as that. Okay. So the net book value of the asset that we are selling is 22,000. Okay. Now in the beginning of the year, the value of asset that we had is 39,000. So we can say opening balance is 398,000, and we know that from there we sold worth 22,000. Okay, so in my hand I should have only 376,000, but we also made additional purchase of 195,000, which should increase the value of asset. Okay, so plus 195,000. Okay, so when we do this, it should give me value as 5, 11, 9, 10, 17, 1, 3, 4, 5. 571. Okay, but according to our book, the value is only 480. Okay, so if we subtract 571 minus 480, then this amount is amount of depreciation. So it's 1 here, and then here it is 9. Okay, so 91,000, option C is your correct answer. Okay, let's move on to the next question. It says, the accounting year of the business ends on 31st December. Okay, and office building with a useful life of 40 years was purchased on 1st January 2010 for 400,000. It is expected to have no residual value. Okay, so we will not have any scrap value, and depreciation is charged using the reducing balance method. So it is 40 years purchased on 2010, and the value is 400,000. There is no scrap value, and the method of depreciation is the straight line method. So it says that office building was revalued on 1st January 2018. Okay, after 7 years, actually after 8 years, we are revaluating for 480,000. So the question is, what will be the net book value of office building on 31st December 2019? Okay, so like previous question, let's calculate how many years has gone before we revalue this asset. Okay, so it is 2010, 11, 12, 13, 14, 15, 16, and 17. 1, 2, 3, 4, 5, 6, 7, 8. Okay, so 8 years is passed out of 40 years. Out of 40 years. So that we have only 32 years left. Okay, so we have 32 years left, and it has been revalued at 480,000. So the amount of depreciation per year would be 480,000 divided by 32. Okay, how much is that? So it's 15,000 per year. Amount of depreciation is 15,000 per year. Now in 2018 we charged 15,000, and in 2019 as well we charged 15,000 because the straight line method. Why I'm doing that? Because they want us to find out what is the net book value on 31st December 2018. So I can say at the end, 2019. At the end of 2019, total accumulated depreciation is 30,000. So the value of the asset is 480,000. and 80,000. Accumulated depreciation is 30,000. So 480 minus 30 is 450 is the net book value of the asset. Okay, 450,000. Let's move on to the next question. Says, a new machine is purchased at a price of $75,000. In addition, delivery and the installation cost is 2,500. So please note this, that every time when there is delivery and installation cost for the asset, okay, it is added to the cost of the asset. So cost is 75,000, but delivery and installation is 2,500. So the total cost of this asset would be 77,500. The business depreciates all non-current assets at a rate of 20% per annum using the straight line method. By how much would depreciation decrease the profit for the year? So it basically means what is the depreciation for the year? Okay, so we need to find out 20% of 77,500 to calculate depreciation. Okay, so I'm getting 15,500. This is the amount of depreciation that we charge this year. Okay, 15,500. Let's move on to the next question. It says, why is an expense for depreciation included in the financial statement? Okay. Option is to charge the wear and tear on non-current asset against profit, to make cash available to replace non-current asset, to set cash aside for future repairs of non-current asset, to show the current market value of non-current asset. It is similar to question that we have solved before. So we do not write down at a market value. We do not write down assets in our book at a market value. So this is not the option. Repair is revenue expenditure. So it is also not recorded here. And we do not write down this as because we had to replace this asset in the future. And one of the causes of depreciation is wear and tear. So this is your correct option. Okay, let's move on. It says, a company includes the following expenditure as a motor van. So on first year, you purchase motor van for 80,000. In second year, purchase tires for 2,000. And in second year itself, there's a purchase of attached trolley, okay, for a motor van, 10,000. Now, if you look at here, the tires that you have bought is your repairing expenses, okay? But whereas buying trolley is your capital expenditure. So this is your revenue expenditure, this is your capital expenditure. So if it is a capital expenditure, then we need to add it with the cost of asset. So the total cost we can say this asset has is 80,000 plus 10,000. Let's say depreciation to all vehicles is 20% on cost. Okay, that means it's the straight line method. A full year depreciation is charged in the year of purchase. We don't know when we purchase it, but we should charge full year depreciation. So the question is, what is the depreciation charges on vehicle for year 2? So 90,000 into 20%. So 90,000, it is 80,000 plus 10,000 into 20%. and that should give me 18,000. Let's verify this. Okay, see 80,000. Next question. It says, which non-current asset is most likely to be depreciated using revaluation method? Okay, so the third method of calculating depreciation is revaluation method. And we use this method in small non-current asset. Okay, you cannot say those are revenue expenditure because they are capital expenditure, but they are small in nature and it fluctuates. Sometimes you add on to it, sometimes you get, sometimes those assets get lost, okay, or it damages. So basically this asset is called loose tools. So in loose tools, it is most appropriate to use revaluation method, okay. Okay, loose tools, option A. Next question. It says, a trader purchased a motor vehicle costing 36,000, is the cost 36,000 on 1st July 2016. The estimated useful life of the motor vehicle was 5 years and estimated residual value is 6,000. Okay, residual value is 6,000. Depreciation is provided on motor vehicle, provided on a month-by-month basis using the straight line method. Okay, so we need to calculate from month-by-month basis. The motor vehicle was sold on 31st March 2018 for 22,500. So what was the profit or loss on this disposal? So we need to find out what is the net book value of this asset to find out whether it's a profit or loss on disposal. Okay? So depreciation method is very simple. We need to use straight line method. But first, let's find out how much should be the depreciation for a year. So for this, we have cost, we have scrap value, we have useful life. So the cost is 36. Okay, scrap value is 6,000 and useful life is 5 years. Okay, so I can see that 6,000 is the depreciation we need to subtract each year. Now let's make a timeline from the date we purchased to the date we sold it. Okay, so you see here, we purchased it on 1st July 2016, okay, and we are selling it on 31st March 2018. Okay, so 1st July 2016 to 1st July 2017, 1 year. Okay, so 07/1/17, 1 year, and 1st July 2018 is 2 years. Okay, so that means we did not even use this asset for full 2 years. So for this 1 year, we charge 6,000 as our depreciation. And for this, how many months? This 9 months. Yeah, this 9 months, we need to calculate depreciation. Okay, so which is 6,000 is a depreciation for 1 year into 9 divided by 12. Okay, so I can get 4,500. So the total depreciation that we have charged is 6,000 plus 4,500 is equals to, depreciation is 10,500 The cost is 36,000. So the net book value is 25,500. Okay, so net book value is 25,500, but we are selling it for 22,500. So in this case, we made a loss, 22,500. So it is 0, 3. So it's a 3,000 loss. Okay, let's verify this. Loss of 3,000, option C. Let's move on. Oh, thank you so much. This is it for today's class. Hope I'll see you next time. Okay. Till then, if you have any questions, then please comment in our comment section below. I'll try to answer all the questions and all the queries that you have. Okay, stay tuned and have a nice day.